some scope for overshooting that 1.4.
Thank you so much for joining BloombergQuint. If we can start off by talking about the quarter, it was fairly a good quarter, and you also mentioned in your presentation that it was because the demand has been quite robust. Could you tell us where exactly is this demand coming from? Are these the government projects or from private sector? How is the demand looking like?
Automotive industry grew by 15% in the last quarter. Appliances sector is also grown double digits. If you look at infrastructure, starting from bridges to water pipelines to several infrastructure projects, metro, which have been really demanding steel. So almost all the sectors, I think there is a broad-based improvement and very positive outlook which is coming in. So that has increased the steel demand. First time we have observed the steel demand going up above 8% in the Q4. So far, we have seen in the last 5 years, always the steel demand is 0.4 or 0.5 times of GDP growth. So last quarter, suddenly it has gone up above 1. And on an average today, in the last 1 year, is 1.18 times of the GDP.
Okay.
So that clearly indicates that the investment cycle is starting and steel demand is picking up. The momentum will further accelerate. So this time of pickup in demand we started seeing from December 2017 onwards.
Yeah.
Now I think it is picking up momentum.
And also during that period, only roughly during that period, the prices, steel prices also started going up. So even that helped in your numbers. And if you can say, what is the price trend looking like in the future?
No, there are two things, either globally or in India. One is demand has picked up. So globally, I think two issues. One is structural. Structurally, China, the way they are behaving in a disciplined manner by way of supply chain reforms and also moderating their exports. They have put less steel in the international markets. That has brought a lot of balance in the demand supply. Yeah. So globally, the prices started picking up. That is one. The second area is the investment outlook overall globally has improved because the oil prices went up and the machinery sector is doing better. So with that, global steel prices have picked up and steel demand is quite positive. In this year, it is expected that 1.8% steel demand will go up over FY17. In FY17, the steel demand went up over 4%. So that is the kind of global steel industry outlook. If I look at India is concerned, as I explained to you, when it went up by 7.8%, and this momentum is expected to continue going forward, particularly when the steel installed capacity is 130 million ton and when we produced 105 million ton of finished steel last year. So there is hardly any capacity that would be available to meet the incremental demand that is going to come in India. So demand is strong. There is not enough supply in Indian scenario. So therefore, I don't expect steel prices, there will be pressure, but they will be range bound. They may not go up quite significantly from the current levels. Same scenario we are seeing in the iron ore and coking coal prices. So, and the companies which have taken steps to reduce cost, to increase the volumes or to change the product mix, I think those companies will be the winners, particularly in this cycle, and also who have invested to create more capacity, which we have been investing in the last 1.5 years. So we have now committed more capex to ensure that more capacity will come in the next 2 years' time. So we will be bringing in 6.7 million ton of additional crude steel capacity, another 3.3 million ton of downstream capacity. So I think this will change the entire dynamics of JSW Steel in the marketplace.
And also speaking about the capex, so what would be the capex for the next 2 to 3 years? Are you changing that? And since you mentioned that you would be also looking at increasing the capacity, so what will be the capacity utilization and also on the capex line?
We have operated at 91% capacity utilization in the last year. So in this year, we have given a guidance of 3% growth. We said 16.75 million ton of production, as in 16.27. So our capacity utilization in this year is 93%, FY19. So with this, as I mentioned, that we have committed additionally another 17,000 crores. So the total capital expenditure will be 44,400 crores. We have already spent 4,690. Balance left out is 40,000 crores. 10,000 crores we are spending in FY19. 15,000 crores in FY20, balance in FY2021. So out of this 45,000 crores, we will be financing 25,000 crores out of the debt, balance out of cash accruals of the company. So when we say our debt to EBITDA we maintain at 3.75 times, today we are at 2.57. So even considering this entire capital expenditure and the kind of debt we would like to raise, including the repayments, I don't think we will be at least very near to the 3.75. We have enough headroom not only to meet this capex or to look at any further inorganic growth opportunities.
So what is the debt levels that we are talking about, and you are like fairly comfortable with those levels, or is there any plan to reduce it further, and by how much?
A company which has been growing at a rate of 15-20% every year, where our debt is 38,000 crores for 18 million ton company with a 2.57 debt to EBITDA, 1.38 debt to net worth. They are very, very healthy and strong balance sheet. We are guiding because we are an aspirational company, we wanted to grow. We don't want to go beyond 3.75 debt to EBITDA and 1.75 debt to net worth. We'll be well within those limits. As and when we are announcing any future plans, we continue to maintain those ratios below these levels.
And what will be the project pipeline then in terms of expansion as well?
Expansion I have already mentioned that crude steel capacity going up to 24.7 million ton, downstream going up, cost saving projects coming up, mining projects coming up. So they are the areas where we are committing capex. In addition to that, any inorganic opportunities like Monet, which if NCLT approves, will implement. Similarly, any other opportunities that would come in, either in India or overseas, we continue to look at.
On Monet then, what will be the strategy? Like you're just going to be, are you in the wait and watch mode currently?
We have done our job. We have submitted our resolution plan, which has been approved by COC. It has been submitted to NCLT. So there are hearings happening. We expect that it will be cleared. We have already received the CCI approval. So we are just waiting for the NCLT clearance for implementing the resolution plan.
And what are the prospects on SR then? What do you think, what would be your strategy? Do you think the second round of bidding would be open?
It is an intense litigation which is happening in first round itself. So I think the courts have to decide about the first round. After that, maybe fate of the second round will be decided. So we're just watching.
But what will be your strategy in that case? Like, will there be any legal action? Like, would you be like moving Supreme Court or something like that?
We are not currently contemplating any legal action. So we wrote to COC that fresh bidding has to be done, opening to everybody. So far, they have not considered that. So we continue to pursue with COC that they should permit JSW Steel to independently bid. We'll continue to do that.
All right, and final question from my side on the outlook of the entire industry. What do you think is the outlook for FY19 in terms of demand as well?
FY19, our expectation is demand will be in the range of 7 to 7.5%, which is equal to GDP. GDP, for instance, if it is growing in that range, taking the cue from the last year, 1.2 times of 7 to 7.5%, then it should be more than 8.5. That is the kind of demand which should be there. But if you look at user industry point of view, infrastructure, automobiles, packaging and other industries, what is their growth for the FY19, and then apply on the proportion of demand from each of these sectors, then it will be in this range of 7 to 7.5. That is why we say that the demand for steel in FY19 will be in the range of 7 to 7.5%.
This is just a domestic demand that you're talking about. And what about the international? Where do you see
international demand? WSA has already estimated it will be 1.8% growth over FY17. That is the kind of growth they are anticipating.
Thank you so much for talking to BloombergQuint.